Hey guys, this is Hardin Tate with RedwoodForex.com, and I want to do a video on continuation bars. So I'm looking at a chart of the New Zealand US dollar, and this is a daily chart, so each one of these candles represents a day in the market. The red ones are finished bearish and the white ones finished bullish. Just want to make that clear because I know a few people have a hard time understanding what these candles mean. So this is on continuation bars. And the continuation bar that I'm referring to is this one right here. I'll zoom in on it. So here's this bar, and it's an outside bar. So there's a clear indication that the in this area, since it's finished bearish, that the bears had won in this area. Now we got the bar, but there's more to the story than just this outside bar. So this bar right here, the high to the low, fully engulfed the previous bar. And so the market on this candle right here opened here, at one point went all the way up to this point, at one time went all the way down to this point, and it finished and closed right here. Now we got the outside bar, and there's more to the story. So right here is the 365 EMA moving average and the 50% fib retracement level. So if I zoom back out, I'll show you how I got the fib retracement. All you do is you go to your Fibonacci indicator, and you go from bottom and draw it all the way to the top. Since this is we're seeing the retracement from the motion of it going from here all the way up to this point. And you can see right here that this bar cut right through the 50% level. So this shows me that the market came here, and if you look at the previous day, the market played around with this 50% level right here, and it wasn't able to close below it. But the next day, it went above the previous high of the previous bar, and then finished below and closed below. So very strong indication that the bears are winning in this area. So we got the 50% fib retracement, 365 EMA, and the one that really made this nice was the bar closed below the 0.7900 level. Big round number. These three things combined with the outside bar made it very likely that when the price came back to this area, to the 7,900 level, that it was going to act as resistance. Because before it acted as support right here. So what I did is I put a sell limit right here at the 0.79 level, so that when the market came back, it would enter me into a sell right at this point. So I did that, and then I put a standard stop behind the back of this bearish outside bar. Because if the market had made it past this high right here, whatever logic we were using to make this trade would now be invalid. But if the market had retraced above the 7,900 and above the 50%, I would have been a little worried, to be honest. But so anyway, had a stop of 70 pips right below the back of this bar, and I was taking profit at the 61.8 level, which it's now below. So I didn't have any trouble doing that. So for a stop of 80 pips, I had a chance to make 100 pips. So not a bad trade. So just want to do a thing on continuation bars. Basically, the market had, from this point, gone all the way up, and it's been trickling back down. And once this bar appeared through the 50% level and the 7,900 level, it was a very good indication that the market was going to continue this downtrend that it had been doing for a little bit. So hopefully you're able to learn something. Check out RedwoodForex.com. Have a great day.